Hi, welcome back to the channel. Now, in this month's July stock market outlook, I'm going to be walking through another really high level, broader market overview of all of the US stock market indexes. I'll be spending around 5-10 minutes just walking through all the charts, and as usual, I have around 20 of my best stock charts for your watch lists going into July, and hopefully the Scottish accent isn't too difficult to understand. Now, it has taken around 20 hours to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. If you follow me closely on X or StockTwits, hopefully my charts have helped you to buy stocks over the last couple of months, and hopefully my work last month also helped some of my newer followers. I think the numbers looking back on the stock selections kind of speak for themselves. There really were a lot of really great slam dunks out there. Now, before I get into it, for disclosure, myself or my clients may hold positions in some of the names mentioned, but I have highlighted any disclosures on the charts. Most of you know by now, I don't use any magical Harry hindsight indicators. I timestamp absolutely everything, which is massively important for the field in which I work. I'm one of the very few who go on the record with their work. But before I get into it, just to be completely clear, I'm neither a perma bull or a perma bear. I simply just analyse the data, the charts, and draw logical conclusions using my charts. But please pause the video. Very, very important disclaimer, and also smash a like button, share and subscribe. It really does help with the YouTube algorithm to help get my work a lot more noticed. Now, where I just want to pick up this month is with the July forward seasonality data. Now, as we can see, the data over the last 75 years supports a bullish July. Now, I get a lot of questions on seasonality. I take it with a huge pinch of salt. If you just look at the performance, for example, in June so far, the S&P is up nearly 4.5%, whereas historically it's one of the only 3 months that tends to register a down month. I'm sure some of you might have heard the phrase sell in May. That would have been a horrible idea this year, as we already know. But looking forward, there is a positive expectancy, I think, generally with seasonality. But seasonality always comes secondary to what the charts are showing. Now, just to clarify, I am recording this on Friday the 27th of June. There is still around 2 hours left in Friday's session. We also have Monday, so it's not quite month end yet. That will we'll have July kicking in on Tuesday, but as it's the weekend, I do like to put these videos out for social media. But we have now completed the V-shaped recovery, which has been central to my thesis over the last couple of months. I couldn't be happier. But what comes next? Well, there are some logical targets that I want to just bring into focus here. Now, it's been a few months, I think, since I actually presented this chart. If you follow me over the last few years, you know that I've been working with 6,700 as my upside objective for the S&P 500. Now, we've obviously had to deal with the recent crash. It's been a monstrous V-shaped recovery. But if this new breakout to all-time highs sticks the landing, then I think it's very, very reasonable. As the chart shows, the market gravitates towards these Fibonacci levels. It has done dating back all the way to the dot-com bubble. So 6,700 would be my, I guess, near-term objective. I'm hopeful, provided the market doesn't crash and shit the bed again, then 6,700 would be my level. But there is a note of caution that comes with that, and I just want to show that what can potentially happen when breakouts fail in major indexes. Now, I've just used the S&P 500 here just for complete simplicity. oftentimes when we get failed breakouts in major indexes, especially the likes of the S&P 500, you could also use the small caps as well, the triple Qs, whatever, you can go back and look for yourself. But if we do get some failed breakouts, then that would be a signal for me. It doesn't say that the market's about to correct. It doesn't mean the market's about to crash. But for me, and certainly what I communicate to my clients 99% of the time is, look, just hold on a little bit. Let's step back. Let's just observe. Don't go smashing into lots of new high-risk positions. So really, I want to see the S&P 500 stick the landing on this breakout. Likewise, I definitely want to see the triple Qs. The triple Qs chart has been textbook technical analysis, rebounding from the November 2021 highs. We call this polarity, and it's obviously, hindsight's told us it's marked the bottom. But again, best case scenario, if this breakout sticks to landing, especially with a lot of hedge funds that have been underweight US equities, I think there is the possibility that there is a bit of a move here, despite the monstrous move that we've already had off the lows. I think what we've seen is a lot of rotation into overseas markets. If you have a look at the European indexes, for example, a lot of European stocks, global stocks, have been on a rocket ship as well. So potentially we could start to see hedge funds getting back into US equities, and that's something I'm obviously very, very hopeful for. The NYSE composite, again, looks like it's potentially going out at new closing all-time highs. Again, same message with the S&P, the Qs, etc. You want to see this breakout stick the landing. Same message with the Russell 3000. It looks like it is now testing the all-time highs again. Want to see this stick the landing. Now, I think one of the big areas of focus for me over the last few weeks is potentially looking at the catch-up trade. We all know the S&P 500 is pushing against all-time highs. We know the triple Qs are pushing against all-time highs. But I believe that there's a potential catch-up in a lot of the riskier names in the market. I'm specifically looking at charts like the Russell 2000. Now, obviously, when we get into individual stock selection in small caps, it can be very, very tricky, especially if you don't have the mental framework to deal with, 10%, 15% swings on a weekly basis, some of the individual names can give. So you might want to consider something like the Russell 2000 IWM. For me, it's very, very straightforward. I just apply systematic process. It's just a really basic trailing stop loss, and ultimately when you take a position, you just want it to continue grinding higher, but you want to know kind of where the exit potentially might be. So for me, I think there's a risk to reward proposition potentially in the small caps. Same message with the micro caps as well. Rebounded from the COVID crash levels and potentially setting up technically. And I also, again, over the last couple of weeks with my clients, although I'm not a big fan of a lot of the companies within the Dow Jones Industrial Average, I know there's a school of thought out there that it's the most important index in the world. I think the index is full of a lot of crap. I think if you follow me on X, you might have spotted me having conversations over the last few months on that one. But certainly it looks like the Dow Jones is now showing itself as a bit of a catch-up over the last few trading sessions. And if you've got all the other indexes pushing against all-time highs, it makes a lot of sense to me that the Dow Jones Industrial Average will go and test those previous levels as well. And also, we've had a historic collapse in the VIX. Again, if you follow me closely on social media, you'll know that this was the chart that signalled buying stocks a couple of months ago. When the VIX gets above 50, you just have to look at it as a massive buying opportunity. It signalled the bottom for the last two kind of corrective crash phases. So for me, we are in the kind of the buy zone. Now, there is a complacency zone as well within this chart as well. So when you do get below kind of that 10, 11, 12 level, you have to look at it as complacency. But I love the VIX just chilling out in this kind of 12 to 20 zone. So for me, it's in an environment where I'm looking at buying stocks. I'm looking for stocks that are not overextended. I'm looking for pullback opportunities on great stocks. Obviously, stocks don't keep going up forever. So when you get, that 2, 3, 4% pullback and solid uptrends, for me, that just represents opportunity. And that's really what this VIX chart is kind of advocating for. Now, there are a few other key charts that I think I want to cover this month as well before I get into the individual stocks. Obviously, the bond market is massive. Get a lot of questions on the bond market, especially from my hedge fund clients, money managers, etc. The way that I'm approaching from a technical perspective the bond market at the moment is there's a massive risk to reward proposition going long with TLT. The problem that we have with TLT is it's been dead money for years. So I think if you are potentially looking at the bond market as a potential area and your time horizon is maybe a few years out, you do have a near 20% short interest on TLT with very, very easy to define risk levels. I think if you get below 80, then obviously all bets are off. Then you're probably looking for, potentially a failed breakdown and a rip higher. But for the time being, we are seeing these levels dating back to 2000 act as a kind of floor for price at the moment. It's a solid support level technically, but again, it's a very, very choppy, messy area of the market. It's not an area that I feel that you can go into and expect to make, quick 10%, 20% returns, etc., like we're seeing with the stock market at the moment. The gold is taking a little bit of a backseat over the last week or two, but we are still holding above that 3,200 level. So I think if you are out there and you're a gold bug, I think you're absolutely fine. Just for complete disclosure, we met our upside targets in gold a few months ago. I think very, very happy with the performance. But again, just want to see this 3,200 act as a new floor for price. And potentially if it can break out as well above that 3,500 level, then I think 5,000 is a very logical target to aim for. And also silver, if we think about the potential catch-up that I was talking about in the US stock market, potentially with the small caps, the micro caps, etc., potentially silver might have that same catch-up as well in precious metals, so that might be something to look at as well. Now, like I said, I am about to run through, I think I actually have around 25 individual stocks for your watch lists, but if you are still here, please do smash the like button. Tells me that you're getting a lot of value from the analysis. And also, let me know what you think in the comments. Do you agree with the charts? Do you have any thoughts yourself on kind of what's going on with the market? How do you see July playing out? So, individual stocks. So I want to just maybe start off with Uber. Now, Uber is looking like it's potentially trying to kind of break out above very, very key levels. I think if we take out these levels here at 93.60, then I think logical upside targets to aim for are up around 132. Now, we have had a lot of shenanigans with Uber over the last month. I think robo-taxis, Waymo, it's just been kind of a bit of a choppy mess, but over the last week we've had a massive spike to the upside, so the market is starting to recognise, I think, the potential in Uber. It has been choppy over the last couple of years. It's been more of a buy low, sell high kind of chart, but potentially if it can take out these pivot levels here at 93.60, then certainly Uber might be one to keep an eye on. I also want to bring into focus CrowdStrike as well. It is looking like it's breaking out of a cup and handle pattern dating back over the last few months. So again, I think it's a very, very straightforward chart to utilise. Now also AMD has been an absolute monster over the last few weeks. I am now looking at this potential as a pullback opportunity. Now it's, going back to what I was saying at the start about, the market doesn't go up in a straight line. You do get these 4 or 5% pullbacks. When you have a solid uptrend, solid stock, I think that represents opportunity. So I'm probably anticipating a pullback into these levels dating back to January 2025. For disclosure, this is one of our high conviction ideas at the moment. But if it can stick the landing and hold this level around 130, then I think there's logical upside targets to aim for there with AMD as well. Same message with NVIDIA. Big question mark I've got, I think, with semiconductors in general at the moment is the SMH chart. If you're into ETFs, for example, I actually should have had SMH prepared. Apologies for not having it, but the SMH chart is actually testing previous all-time highs at the moment. So I think what semiconductors do in the near term will really be dictated. I think NVIDIA going out at new all-time highs is obviously a positive. Hopefully that can drive a breakout in SMH to kind of give a little bit more propulsion to the likes of NVIDIA, to AMD, etc. But we have met our upside targets in NVIDIA. For us, it was a no-brainer, buy the dip on the crash. But it is looking like it's potentially breaking out. And if the breakout can stick the landing here, then I think $200 is a potential area to aim for. Same message with Meta. We've just met our upside targets, but it is testing these previous all-time high breakout levels. And certainly the Fibonacci levels here up around 860 and then 1300 might make some sense as well. Now, lots of, questions on Palantir over the last few months. Again, long-term followers of the channel will know that I've been covering this since $20. I can't believe it's up at 140, but here we are. Again, it's holding its breakout. It is chopping about over the last few weeks. I think most of us see that, but I think that's very, very normal, very, very logical, given the monster run that it's had. I think it's up around, let's say, 80, 90% year to date. So it's taking a well-earned breather. I'm sure there's plenty of Palantir holders out there as well that have done well in the stock over the last 12 months. I'm working with upside targets up around 170. Snowflake is also breaking out. Very, very happy with the stock. With technical analysis, and I just kind of want to touch on this as well, is when you are picking out stocks that are, that have maybe been beaten up a little bit, they're not necessarily breaking out to new all-time highs. I actually have a preference for buy low, sell high. It's just the way that I kind of, my framework, it's kind of like a hybrid of technical analysis and fundamental investing, etc. So I actually gravitate more towards stocks that are breaking out of kind of bases and they have, very, very logical upside targets, maybe previous all-time highs, etc. So I think Snowflake for me, it looks like it's potentially breaking out, but it does have to take out pivot levels. That's always the frustration, because oftentimes what you get, especially with just a chart like Snowflake, is it looks like it's going great, and then all of a sudden it runs into these pivot levels, and you get a bit of profit taking, etc., and it chops about, then breaks out again. But for me, I think you can just remain bullish above $200, and I think there's a very long-term target there up around 390. NU Holdings, I think there's an interpretation of this chart. There's a few different interpretations, like there always is with technical analysis. But with NU Holdings, I think there's a potential interpretation of a 4-year cup and handle pattern that's been just kind of developing since its IPO declines. I think you can actually define risk against the recent lows here. It has been a choppy stock over the last few months. I think most of us see that with the chart. I have a lot of clients that are very, very bullish on the stock's fundamentals. But for me, it needs to probably confirm a new uptrend and break out of this kind of cup and handle pattern. So I think NU holdings might be worth adding to your watch list. Now, Microsoft again has been one of those no-brainer buy the dips on the crash charts for us. It has recently met solid upside targets. Lots of messages after last month's analysis, because I covered this last month as well. The target that I'm working with here is now up around 570. I think the message is very, very simple. I think as long as you're above that kind of 460 level, then I think you can aim for 570. Twilio, again, I think there's the potential there for a breakout there. If you're into kind of the mid-cap companies, then there's potentially a 22-23% uplift there if you're looking for stocks in kind of like the software tech space. Dell as well has been great. I think there's potential there that it's breaking out, and again the target that we're working with there is up around 179. I think there's a lot of solid fundamentals with Dell. I actually use the Dell laptops, the XPS, absolutely love it. So yeah, the 180 target is what I'm looking at there. C Limited has actually been quite choppy over the last month. I actually covered this last month, and I think the message I wanted to communicate with this one and just kind of reiterate, I think as long as you're holding in above that kind of 145 level, then I think you're absolutely fine. Roblox is potentially breaking out again above the $100 round number level. I think certainly the target's up around 140, but this has been one of ours since 70, and it's just kept grinding higher and grinding higher. Intuit as well. I think again, I think when you get these big base breakouts into new all-time highs, it does get very, very challenging because we don't have logical upside targets. But I think in this case, I think the Fibonacci levels of the COVID crash make a lot of sense here. So combine that with the $1,000 round number. Again, very, very strong fundamentals with the company. So again, up around 1,000. And Target Resources as well. Just kind of going back, buy low, sell high. I like to try and identify relative strength before it shows up on the scans of all the relative strength gurus. Finding relative strength at its source can only be found when you're looking for kind of buy low, sell high opportunities. So I like to use solid support levels. And it's not just stocks like Target Resources. I use this with all the big tech companies, etc. So I'm always looking for big solid support levels, and it looks like Target Resources is digging in. It had an absolutely monster trend a couple of years ago, and I think this is a potential rebound level with very, very easy to define risk levels at that 160 level as well. And the Palo Alto Networks again is testing previous all-time highs. So I think the levels there that we're looking at are up around 269 if it can break out to new all-time highs. And it's not quite there yet. I think it probably needs to kind of get up around that 210 level to confirm a breakout. But if it can do that, then again 270 would be the level to look for. SoFi has been an absolute monster over the last couple of weeks. Congrats anybody that has a position. It's one of our high conviction ideas at the moment. I think just kind of going back to what I was saying about pivot levels, I'll be saying to my clients this weekend in my client update that this 1850 level is a level of interest for me. Break through that, and I think game on up until around 25. But please note, I always use systematic process. So if my bullish thesis for whatever reason fails, if the market doesn't agree with my assessment, then I'm always kind of taken out by the process that I have in place. So whilst I might be bullish on SoFi at the moment, that can flip on 30 seconds notice if there's any big decline, because ultimately trailing stop losses are in place for a reason. But really like SoFi, I absolutely love the 13% short interest. We've got Amazon. Again, covered this one last month. It's been going great. I think above $200, up around 240 would be the level. I guess I don't really need to talk about the fundamentals of Amazon, etc. I'm sure we all know it very, very well. But one of the short squeeze candidates that we've been working with over the last couple of months has been NuScale Power Corp. Now, one of the tools that I'm using here is just the 5-week moving average as a potential risk management tool. It has been a little bit choppy, but again, I think when you've got a stock that's up 100% year to date, I think that's very, very normal, very, very logical. With our clients, it's really just above $32. I think as long as we're above 32, I think 60 is in play. But again, I think the earnings are probably going to be the big one there. It's only a $5 billion market cap, so I'm always very, very wary, especially when there's 18% short interest. We've had a bit of a short squeeze. I think we all know the fundamentals and potential move to nuclear power in the US. NuScale Power stands to benefit, etc. So it'll be interesting to see what the journey looks like and what the big winners in the space will be. But the market seems to like NuScale Power, but given it's a $5 billion market cap, it's obviously super high risk. We've also got Toll Brothers. I think very, very straightforward cup and handle pattern there that's developing. If you're into the home, I think it's home construction or home builders. Obviously I'm not from the US, but that's what my understanding of the company is. It's in the kind of the home building, home construction space, real estate space as well. But looks like it's potentially basing. And just going back to what I was saying, this is kind of what I look for in stocks that are starting to kind of recover. Chipotle, been a while since I've actually looked at this chart. One of my clients asked for it last week. And again, I like the look of Chipotle. I actually really like the food at Chipotle. I'm sure that's probably a bit divisive amongst some of you. But I think as long as you're above that kind of 52 level, then I think the previous highs at 65, it might make a lot of sense. We've got Netflix. Now, Netflix has been an absolute superstar over the last few months. Technical analysis has helped a lot with this one. The 40-week moving average or the 200-day moving average has acted as a massive support level. And just to reiterate, the targets that we're working with there are up at 1500. Mercado Libre. Now, if you're into the Amazon of South America, I believe they're known as. Again, solid fundamentals, etc. I covered this one a couple of months ago, and the message is still the same. I think as long as you're above $2,000, I think 3,300 is very, very logical to aim for. I'm surprised they haven't gone down the route of a stock split yet. Obviously, it's a super expensive stock. So I do suspect that you're going to get that with Melee, with Netflix. Again, I would expect some kind of, maybe a 10-to-1. Something like that in the near future. But remain bullish on Melee. Spotify, again, upside targets that I'm working with there. Long-standing chart of ours, up around 900. And we've also got GE Vernova, which has just been an absolute monster over the last couple of years. And it looks like it's potentially breaking out, and the targets, if this breakout can stick the landing, our trailing stop is up at 480, so a lot of the risk is obviously built in. We've got a lot of the profit in place, and up around 700 would be the next level to aim for. But if you are still here and you're wondering who it is I am and what it is I do, there's a link in the description. Feel free to jump onto our website at honeystocks.com. We're now running our 4th of July special offer for the next few days. It will give you 20% off all of our memberships. We only run 2 promos a year, so if you follow my work a while and would like to check it out, there is a link in the description. All of our transparent, time-stamped work, it's all laid out. I only use my own charts and data, but we provide memberships to all of our premium work, which includes our premium weekend analysis every single weekend, with all of our best charts and our weekend hot list, all of our highest conviction investment ideas. I'll show you what that looks like in just a second, and also access to our midweek halftime analysis as well. It's not just that. We also provide access to a wonderful, highly intelligent community of professionals, investors and traders from all across the world. Provide access to all of our chart books, which cover all of the most liquid stocks, ETFs and commodities from across the world. And if you are someone who's new to technical analysis, I also provide access to our complete technical analysis program, which I used to charge a lot of money for, but I now just include as standard with all of our memberships, and I'm told it's very, very well built as well. But just to kind of show you what our high conviction ideas look like, I'll just show you just a few of our recent ones. I think SoFi, I touched on that one a few minutes ago. The charts always make a lot of sense. I always give very, very clear instructions on the charts. So SoFi, there's AMD, which went out recently as well. Palantir, again, has been an absolute monster. GE Vernova, again, from 350. Got Nvidia, monster. Spotify, monster. But I am very, very unique in what I do. I log for complete transparency all of our highest conviction ideas on our website. I've done this for the last 7 years. So if you are someone who values quality over quantity, then you might find that my work is a really good fit. Generally, I put out one high conviction idea per week. Not just that, there's obviously the weekend analysis with lots of individual trade ideas, but the highest conviction ones I log, like I said, for complete transparency. So feel free to go and check that out. Make sure that the types of stocks that I'm recommending for high conviction ideas are the types of stocks that you like to buy. I'm not pumping any penny stocks or crap companies. I do have a fundamental overlay to my work as well. But again, like I said, feel free to go and scrutinise that. I've also laid out all of the timestamps for my big market calls as well. So again, feel free to go and scrutinise that also. But I think generally speaking, I think my work is good fit for anyone who has a mid-term approach. If you're looking weeks to months out, I think if you are someone who just can't make day trading work, if you're someone who's looking to use systematic process, learn technical analysis, maybe you're just too busy with work, family, life, it's too stressful to find the best stocks, maybe you just want to be part of a community, then you might find my work is a good fit. You'll also have access to me personally on a day-to-day basis. I do have a really dedicated platform which has instant messaging as well. I'm not someone who has a Discord or anything like that. I run everything. You can have a look at the platform. Again, I've got a tutorial on my website to show what it looks like. But yeah, feel free to check that out. If you are still here, smash the like button before you go, and maybe I will welcome you soon to my community. But if you are here to the end, thank you very much for watching, and I hope to welcome you soon. Thanks.